What's up, traders? So today I'm going to show you an amazing opportunity to do both leaps and poor man covered calls with Meta stock. And I'm not only going to show you the best way to do it to get the highest probability of profit, but I'm also going to show you the best time to do it as well. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I bring in multiple six figures a year from the stock market. And I use the money I make from the stock market in order to pay for my entire lifestyle. Now, first things first, make sure that you smash that like button right down there and go ahead and subscribe to the channel. And do remember that I am not a financial advisor and this is not financial advice. All trading comes with risk. I'm just showing you how I've built wealth over time. Now, I'm assuming you of course know what Meta is. Meta is the company that owns both Facebook and Instagram, and they also own WhatsApp and Facebook Messenger and a slew of other products. Now, I personally love Meta as an AI trade, because unlike other companies who are still trying to figure out how to best monetize the money that they're spending on building their AI infrastructure, Meta is already making money off of their investment because they are integrating it with their core product, which is digital advertising. They charge companies to advertise on both Facebook and Instagram platforms. So every time you're scrolling down your news feed and you see another ad, just know that Facebook is making more money. But let's go ahead and take a deeper dive into their fundamentals. All right, so we can see that Meta is currently a $541 stock. They have a market cap of about 1.3 trillion, and they currently have a PE ratio of 21. So it's currently trading at a good price. We can get a pretty good value if we were to purchase the shares today. And we can see that they do have an earnings coming up soon, which is next Wednesday. Now, looking deeper into their fundamentals, this is exactly what you want to see when it comes to revenue and net income from a company. Every single year over the last 5 years that we see here, they have grown. All right, so the year ending December of 2020, they did $85 billion, 2021, 117, 2022 was 116, which is slightly less, but it was only by 1%. And then December of 2023, 134 billion, and December of 2024, 164 billion. So they have nearly doubled their revenue over the last 5 years. And then they've done the same with their net income as well. Went from 29 billion to 39 billion, and then down to 23 billion in 2022, which I'll discuss that in just a moment, and then 39 billion in 2023 and 62 billion in 2024. So they more than doubled their net income over the last 5 years, from 29 billion to 62 billion. Now, looking at their chart over the last several years, I just want to point something out. So if we look at this time frame here, which starts from September of 2021 all the way up to October of 2022, you can see that it dropped significantly. All right, so it went from a high of $381 all the way down to a low of $88 on October 31st of 2022. Now, we were in a bear market for all of 2022. And also during this time, Meta was spending several billions of dollars per year on trying to build the metaverse. And that is why you saw the lower net income on the last slide, is because they were spending so much money on it. And so on top of it being a bear market already, and Meta spending so much money on the metaverse, the stock just continued to sink. And on top of those things, the media was finding anything bad to say about Meta. And here's the thing, sentiment always follows the stock price, and it is never the other way around. And here's what I mean. While the stock price is moving downwards, the media will have nothing but bad things to say about the company, no matter how good the company is actually doing. And the same works in reverse. While a stock price is going up, the media will find nothing but good things to say about the company, no matter how bad the company might be doing. And so that was the case with Meta, and that is why during that span of about a year, it lost almost 75% of its value. And I'm happy to say that during this time, I was buying shares of Meta the entire way down, and it became my biggest holding. Because what I did was I sat back and I looked at the fundamentals, and I'm like, well, how are they saying that this is a dying company when every single year and almost every single quarter, both their revenue and net income is increasing? And the story that the media companies were running with was, oh, TikTok is going to destroy Facebook and Instagram. Nobody uses Facebook anymore, et cetera, et cetera. But I looked at the numbers and I'm like, well, this isn't what the numbers are saying. And so it had a high of what, $381. And so as it continued to go down, I started dollar cost averaging into the stock once it hit $200, and I dollar cost averaged all the way down to $100. And then in October of 2021, it bottomed at $88, and we've pretty much been on an upward trend since then. And we can see that it just recently peaked in February at $725. And so Meta has always been one of my favorite companies, and I do believe that the market is possibly giving us a new opportunity here. but let's look at some more information. And so as far as analysts go, there are currently 53 different analysts covering the stock, and they have it as a strong buy. And we can see that their price targets are a high target of 935, a mean target of 690, and a low target of 448. So it is currently trading below the mean target and not too far away from the low target. All right, so I like what I'm seeing as far as that goes. And most people usually comment on the video asking me what software am I using. This is barchart.com. And they have a ton of advanced screeners, and I use this website to find a lot of great trades. But if you use my link down in the description below, you'll get a free 30 days. And no one's ever complained about free, so go ahead and click the link below in the description and take advantage of this software as well. Now, how I plan on trading Meta is to do a poor man's covered call. Now, if you're already familiar with the strategy, make sure you stay till the end because I'm going to show you a better way to do it in order to ensure the highest probability of profit. However, if you're unfamiliar with the strategy, let me show you how it works. So the objective of a poor man's covered call is to profit from a slow and steady rise in a stock price and to minimize the cost of a long call. All right, so when you buy a long call, you are essentially getting the power of owning 100 shares of the company. And the leverage behind buying a long call is it typically costs a fraction of the price that you would have had to pay if you purchased 100 shares of said company. But then what we'll do is we will sell a call at a higher price, agreeing to sell the call that we just purchased at that higher price. But for doing so, we will receive money up front. So it's very similar to a cover call, but instead of just owning the shares of the company, you own a long call, or in this case, a leap, which is just a long call that is 365 days out or further. And this is how that would kind of work. So let's suppose Meta is trading for around $550, which it currently is. What we could do is we could buy to open a long call at, let's say, around $500 for an expiration date that is 2 years out from now. And for doing so, we'll pay $100 in premium. Now, every contract is worth 100 shares. So if you're paying $100 in premium, then you'll be paying $10,000 up front. But what you'll do simultaneously is you'll sell to open a call at, let's say, $600 for about a month out, and you'll receive $10 in premium, aka $1,000 up front for the contract. All right, and then the goal would be for Meta to just slowly increase over time. Because what will happen is the leaps that we bought will slowly increase in value. And then for the covered call that we sold, as long as by expiration it is still under the $600 mark that we set, then we just keep all that premium that we received, and then we could sell another covered call for the next month as well. And we could just continuously do that month after month after month as long as we own this long call up here. All right, and this is kind of how a P&L chart looks for the poor man's covered call. So as the stock price goes up towards your short call, that is where you'll receive the maximum amount of money for that trade. But if the stock price were to surpass the short call that you sold, then you will start to make less and less money. But let's go ahead and take a look at the data points that I like to look at prior to placing any trade. All right, so the first thing that I want to look at when it comes to leaps and poor man covered calls is the stochastic. Now, the stochastic are these lines that you've seen down here, but the stochastic just aims to show you the direction that momentum is taking a stock. And so these levels above 80 are the overbought areas, and then these levels under 20 are the oversold areas. And so I'm currently using weekly candles, and you can see that Meta is in the oversold area, and it looks like it is curving up and it is about to surpass 20. So that is good. That is showing us that the buyers are starting to step in for Meta stock. And then the second thing that I want to look at are the Bollinger Bands. So the Bollinger Bands are these black lines up here, but that just aims to show you the range that a stock price is expected to trade within. And so currently we can see that the range for Meta is on the low end of $510 to $723. And you can see that most of the time the stock trades within the Bollinger Bands. And so there may be a few times where it pops out, but it always pops right back in. And what I like to see is for the stock to be at the bottom of the Bollinger Band, which Meta stock currently is. So those are two very good data points there. But now let's go ahead and head over to Thinkorswim so we can look at the last data point. But real quick, if you know anybody who could benefit from learning how to generate income off of the cash that they already have, please tell them about the Trade to Freedom community. The link is in the description below. But not only will they see my exact trades when I enter them, but they'll also get my entire options framework via the Trade to Freedom course. Thirdly, they'll have access to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goals as them. So if you know anybody, please tell them about the Trade to Freedom community. The link is in the description below. All right, but now we are in Thinkorswim and I have the options chain pulled up. Now, the first thing we need to do is select our expiration date. Now, by definition, a leaps is any long call that is 365 days or more out. And me personally, I like to go to the furthest out expiration date because that is the closest that you get of just owning the shares. But with an expensive stock like Meta, if we go out to the furthest expiration date, the contracts can be a little bit pricey. So let's take a look. So when buying leaps, I like to use a delta of about 0.70. And so we can see delta here, but by definition, delta is how much an options premium will move per a $1 move in the underlying stock's price. So at a delta of 0.70, it's saying for every $1 move in Meta's stock price, the options premium will move 70 cents. However, most successful traders that I know use the delta as the probability of the event occurring. So I would look at the delta of about 0.70, and that tells me there's about a 70% chance that Meta stock price, which is currently $539, is still above this strike of $490 by this expiration date. Okay, so I would use this strike of about $490 if we were going to use this expiration date. However, if we look at the bid and ask price, we can see it is between $167 to $173. So you would be paying upfront $16,700 to $17,300. Now, you could minimize this price by going to a closer expiration date. So let's go ahead and check them out. Now, remember, for it to be a leaps, it still needs to be over 365 days. So let's use this June of 2026 expiration date, which is 419 days out from now. So I'll go ahead and click that. And if we still go to about a delta of 0.70, that'll put us right back at the strike of 490. And it looks like we'll be paying about $12,000 for this contract. So you'll save about $4,000 to $5,000 compared to the last expiration date that we just looked at. All right, but this strike and expiration date looks good to me. So I would go ahead and select it. And now that we've selected our long call, now we need to go and select our short call. Now remember, for the short call, we wanted some monthly income. So I would go up and I would typically select any expiration date that is within 45 days. And so let's come up here, let's select this expiration that is 35 days out from now. And what I want to do on this end is I want to select a delta of about 0.30. So I'm going to come down and we can see that this strike of $590 is at the delta of 0.30. And that looks good to me. So I'll go ahead and add it to our order. And that is perfect. So we see our long call where we are buying one contract that is 419 days out from now at the $490 strike. And then we are selling a call that is 35 days out from now at the $590 strike. All right, and you can do as many contracts as you like. For me, I like to dollar cost average in, so I'll probably do one contract per day, but you can select however many contracts that you like. And we can see that selling this call has brought our price down a good amount because now we'll only be paying $10,978 for this trade. So if that looks good to you, can you go ahead and hit the review button and place the trade? Now, what I would do is I would wait, because here's the thing, Meta has earnings on April 30th, and there is a good chance that they can move big in either direction. Now, yes, if you wait and they move up big right after earnings, then yes, you'll miss out on some potential gains. However, on the flip side, if they move down big after earnings, then one, you'll miss out on this quick loss, but also two, you'll have a better entry point to enter into this trade. And I always like to err on the side of better safe than sorry. But let's head on down to the P&L chart to see how this trade could pan out depending on the price movements of Meta. All right, so right here where these green dots are is where Meta's stock price is currently at $540. And you can see if you look at that number there at the top left, that as the stock price slowly goes up, the trade becomes worth more and more and more. And the value of the trade can continuously go up all the way up to your short call, which we set at $590. Now, it is at that point that you'll get the max benefit. And we can see you would get about $5,000 per contract. But let's say that Meta goes beyond your short call. Well, that is when you will start to make a little bit less money. And you can see the further and further that Meta goes up, the less money that you will make, but that is okay because this is a bullish trade, so you definitely want it to go up, but the best result will be if it goes up just right around your short call. Now, if Meta stock were to go down, then you start to lose money, and then once it goes below about $520, which is your break-even point, that is where you'll start to lose money. But of course, you already know that because this is a bullish trade. And so it's no different in that sense of owning the shares of the company. If the stock price were to go down and you just own the shares, then you'll be down on the trade as well. All right, but that is the great opportunity that I see unveiling with Meta stock. I took advantage of it in 2022. And it looks like that same opportunity could be developing now. But I will wait till after earnings to see how this works out. But again, if you guys know anybody who can benefit from learning how to generate income off the cash that they already have, then tell them about the Trade Your Freedom community. The link is in the description below. They'll get my trades when I enter them. They'll get my entire options framework via the course. They'll have full access to ask me questions at any given time, and they'll be within a community of other traders who all have the exact same goal as them. Well, ladies and gentlemen, I hope you learned something from this video. I hope that you have a blessed and amazing day, and I will be sure to see you guys on the next one. Peace!